All right, it's Fed Day, Wednesday, December the 11th. The highlight of the day came not too far from the open. We opened up pretty much around unchanged, but Tom in the room talked about a magnet and a downside target being 34.5 because it was the overnight volume point of control. And he was right. So out of the gate, there was an opportunity to sell, and I missed it on a pullback. I think it was right actually to here. This little pullback to 37.75, and I missed it. They didn't fill me because I just wanted to get on the team at a price at some good resistance for this pullback or for this downside continuation. You miss it, you miss it. But then we come down to that target, a couple things. Number one, you reach some sort of identifiable target where you then do something that probably could piss off a lot of people. And when you jump up like this from a move lower, who do you piss off? Shorts. You get shorts mad that they didn't cover at the low tick, that it's still not lower. And there's just always that chance when you, not how far you jumped, but how fast you jumped up, that you get shorts mad. And if you get shorts mad, the direction has changed. And you go from bearish to bullish, and now you look for support on a pullback or for validation or qualification to get long. The other thing that happened was, and I'll show you on another chart, is that we whistled right through the VWAP and open, which generally you don't do. So when you do that, when you go straight up through the open or straight up through the VWAP and then straight up through both, that's a good B2B, bearish to bullish transition. And so the market had a 36 to 37 support area that they came right into on that pullback. Look on the right side, and it drifted a little bit, but ended up being 36, 37. The right side was the upside, and the market had this continuation and reason to get through this swing high and attack some upside levels, which were this swing high, overnight high, which was actually up here. But this swing high and then the overnight high and yesterday's high were roughly the same price, around 43 even. So it made an excuse to go to that next target. And if I didn't get people long, I kept them from getting short. That was what was important in real time. And so they hesitate a little bit at this resistance, which I also told people it wants to go to 42.43. So be careful selling it unless you want to get out of a long. It's okay to get out here, even if it comes up to the ultimate 42.43. You'll probably end up getting out of there anyways. So either way, it jumps up to the 42.43, tests it, and it would have just, in my opinion, flagged sideways, waiting for the FOMC at 1 Central today. But a funny thing happened at 9:30 Central, which we're not surprised about, but most people are. The DOE numbers for crude oil came out, and they came out which hit the price of oil, which was bearish for oil. And it ended up continuing to slap oil pretty aggressively, which weakens up at 9:30, which tends to have the same effect on equity futures. Weak oil, significant weakness in oil is significant weakness in stocks generally. So that changed the whole kind of dynamic of what stocks are going to do when you get an ancillary getting weak out of nowhere. And so right in here, it was like, hey, be careful getting long, is what I said. And if you did get long at this area of support, be careful trying to get it through 40 because of this resistance and because oil was still weak. And sure enough, the market slipped all the way down to test the regular trading session low and some of these swing lows in here. But again, when you get this big jump out of the hole, and this is something I didn't say, but same kind of feature, same kind of pattern, the transition was tended to be sideways to higher, right? Some big jump. So you're always looking for the slap in the face moments of rejection. When do you know the other side is pissed, right? When do you know there's rejection? Someone gets slapped in the face, there's rejection, and someone's mad. So you're looking for those moments. We call them B2B moments. And B2B stands for either bullish to bearish or bearish to bullish, right? One or the other. And B2B transitions. Again, we got one in here. So when it rallied up to here, a pullback in there was a logical place to play it from the long side. Now I'm going to take the footprint and drill down into those bars to show you after 8:30 why the 36-37 area was a decent pullback. Like I said, we got through the VWAP this time and the open, which is this yellow line, without any problem. And generally when it does that, again, that validates the B2B, in this case, bearish to bullish transition. The VWAP was one reason why it was support, and then these green lines that came across, because it was downside speed that we get through, throws a green line across. So all of this green in here, the VWAP, which is the white line, held it, little teacup bottom, and then it swirls up, back up north, and then rallied all the way to like 42.5, 43, even the overnight highs and everything else. Then it calmed down and has gotten busy since, and you should not be surprised about that. It's FOMC. If you're watching this before 1 o'clock Central on December 11th, make sure you're prepared for that statement, and then the 1:30 Central press conference. If you're watching it after it, then obviously it's a little bit irrelevant. But what's important, real-time analysis, that's what we go over in these highlights. That's what we talk about in real time in the trading room. And that's, I don't care how good, bad, or okay you are as a trader, everybody's weakness at some point is real-time analysis. That's when you're going to have to read the market and trade and get in to a trade, get out of a trade. It's always in real time. No matter if you're short, medium, or long-term trader, no matter what your style, no matter what your instrument, when you open and close positions, it's in real time. And that's when you become emotional.